Hello, welcome to all. Very good morning. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning to all. Today is Tuesday, 26th of September. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimers first, slides first. Okay, so leverage trading carries a high degree of risk and may not be suitable for everyone. This presentation is not offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, so now, as usual, for those who join us for the first time, so this is our main agenda for our daily dose of market insights. Firstly, we start off with a discussion of what are the key highlights or event that take shape yesterday during the European session, and as well as the overnight US session in terms of corporate events, as well as key speeches by central bankers, and most importantly, is there any key economic data releases? And also, next, we will actually share what are the events as well as key economic data releases to look out for today during the rest of the Asia session, stretching into the US session. And as well, we will round up the daily dose of market insights with key short-term technical outlook on the various asset classes that has started to exhibit interesting technical configuration. All right, so without further ado, let's start off with the events that actually took shape yesterday and as well as early this morning. So let us start off with yesterday. There's actually no key economic data releases, with the fact that there's actually a slew of ECB official speech. Okay, starting with the ECB President Lagarde. So what she said yesterday was actually pretty much unchanged in terms of her tonality. She did mention that there is actually no clear signs that inflation has starts to actually abate. So she's still in a mode of looking to actually combat inflation to bring it down to 2%. All right, so now let's take a look at the event that took shape yesterday. So this is what she actually mentioned. All right, okay, so let us focus more on the screen first over here. Okay, so let me hide myself. Okay, so basically this is what she said: stay restrictive as long as needed. Okay, so it's pretty much unchanged. But over here, there is actually some officials, if you were to go down at this point in time. So basically, there are actually some, she actually acknowledged that the current interest rate over here, high interest rate environment in Eurozone, has started to the pain for 30% household that have variable mortgages. So she do actually acknowledge that at this point in time, uh, yes, even though interest rates are pretty much high to combat inflation, which is they want to bring it to 2%. So if you look at the core inflation is at around 5.3%, still somewhere more to go before hitting the 2% mark. But however, the current high level of interest rate is actually causing a bit of pain to households that has variable interest rate mortgages. So on one hand, over here is that is very high likelihood that the last interest rate hike that was seen about a couple of weeks ago in Eurozone is more or less that peak rate for this point in time. And going forward, there's actually a high chance based on these current speeches that this will be ECB will be on hold for a significant period of time. Okay, but there is no clear signs of the first interest rate cut coming into the Eurozone. Very similar to what the Federal Reserve US Fed stands as well. But all in all, what you could see over here is that yesterday we continue to see a slew of dollar strength coming back into the picture that actually caused the euro dollar, that means the euro versus the euro dollar, to slide to a 6-month low. So later I'll touch on more about the FX market when we touch on the short-term technical outlook on the various FX pair. Okay, so let us focus on what the other events that took shape last night first and early this morning. So over here, late last night, Asia session, the China property market crisis continued to rear its ugly head again. So this time around, those who actually know 2 years or 2.5 years back, Evergrande. So this was actually the forerunner or the catalyst that triggered this ongoing 1.5 year of liquidity crunch that's faced the China property developer market. So Evergrande over here is that one of the unit has missed its onshore payment over here, and as well as the firm starts to scrap credit meetings. And still recall that Evergrande itself, towards the blessing of the Chinese government, actually managed to actually kickstart a restructuring program that was actually pretty agreed on late last year or early, late middle, I'll say Q3 of last year. But however, in the late last week or over the weekend, the firm actually scrapped credit meetings and right now decide to reassess its restructuring plan. That means, i.e., initially, whatever bad debts they own, they actually wanted to actually give out or restructure the bad debt via issuing equity linked note as well as equity. However, this program or this we call it restructuring program seems to be hitting a head wall, but the firm for no reason signed to credit ratings. So there's actually a rumor right now over here is that the firm itself, Evergrande, has started to face another round of liquidity crunch, that whatever earlier terms that they agree on in their restructuring plan got to be renegotiated again. So that actually causes a bit of what I call a risk off in China stocks yesterday and spill over to the Hong Kong stock benchmark index as well, which all of them actually ended in the red yesterday, with the Hang Seng I think down more than 1%. The Hang Seng Tech was similar as well. So that kind of create a negative feedback loop into the Hong Kong benchmark stock indices. So later I'll share with you all what is the current short-term technical outlook on the Hang Seng Index, or the Hong Kong 33 we call in our platform. So these are the two key events that actually took shape yesterday. Yesterday there's no economic data releases on the US front, the US economy. Now, how's the performance of the US stock market yesterday? So US stock market yesterday, after a very weak weekly close of last week performance, there was actually a kind of a technical relief rebound that was seen on the S&P 500. So this is the heat map of the S&P 500 component stocks. So thanks to the mega cap stocks over here, you have Apple up 0.74%, Nvidia up positive 1.5%, Amazon and Tesla up 1.67% and up 0.9%. So with the mega cap stocks closing in the green yesterday, the Nasdaq 100 managed to actually close near the high. So initially, the Nasdaq 100 actually gapped down to actually has an intraday loss of coming close to negative 1%. But throughout the session, after that gap down, thanks to this relief rally that was seen in the mega cap stock, the Nasdaq 100 managed to actually ended the day yesterday with a positive performance, up 0.46%. So almost the same magnitude seen in the S&P 500, up 0.4%. The Russell 2000 up 0.44%. The weakest was the Dow Jones Industrial Average, which is up 0.13%, because there was a fact that over here some of the healthcare stock actually didn't outperform the market. Some of them closed in the red. That causes the Dow Jones to actually be the weakest performer yesterday with only a positive 0.13%. But however, due to yesterday's up performance that was seen in the S&P 500, this positive performance, has it changed the short-term bearish condition that we have on the Nasdaq 100 and the Dow Jones Industrial Average that we actually have for yesterday? So later we will share in the short-term technical outlook. All right. Okay, so now over here, let's take a look at this economic calendar. What are the things to look out for today? Let me expand my screen over here. So over here in Asia session, nothing pretty much key except for Singapore industrial production number out at 1 p.m. Singapore time today. And going forward over here is that we have one ECB official speech later. ECB monetary policy official speech up at 3 p.m. Singapore time. Then over at US over here, as for today, we have a slew of housing data. 9 p.m. we have this S&P Case-Shiller house price data year on year for the month of this one. Okay, this is July, so I think it's a pretty much we call it not really that updated data. So, but market participants are pretty much interested as well to see the state of the housing market in US that has been pretty much resilient in the last 3 months or so. And most important, we have conference about consumer confidence data that's out at 10 p.m. Singapore time today. So that's about it for the key economic data releases to watch out for, as well as event, which is we have one the ECB official speech later at 3 p.m. Singapore time. So that's pretty much sum up for events and data to look out for today. Now comes to the short-term technical outlook. Okay, so let me start off with the FX market first. All right. So over at the FX market over here, let us quickly take a look at the performance in the majors and as well as the Aussie, the CAD, and the Kiwi. So this is a rolling 1 month performance as of today. Okay, rolling 1 month performance. So for sure, if you look at over here, is that the dollar is strengthening very, very steeply against the European currency, against the Swiss franc, the sterling, the euro, and also the dollar yen starts to catch up as well. But however, if you look at the bottom of the table, the dollar didn't strengthen much against the CNH. Very interestingly, later I'll take a look at the CNH chart. Dollar CNH is the offshore Chinese yuan. So despite the fact that we have a negative news flow coming out from the Evergrande, the dollar didn't actually strengthen much against the Chinese yuan. So I do believe that there's a couple of subtle intervention by PBOC to keep alert on this dollar strength against the CNH that's causing the dollar to actually not performing as much against the Aussie, the CAD, and as well as the Kiwi as well. All right, so the CAD over here is due to the fact that we start to see pretty much resilient oil prices that keeping alert on a cap on dollar strength against the Canada dollar. So bear in mind that the Canada dollar also has a kind of a direct correlation with oil prices, which is pretty much firm, holding at the $89-90 per barrel for the WTI crude oil. Okay, so if you were to actually expand zooming much lower for the rolling 5-day, so this is not 1 week, it's a rolling 5-day. So rolling 5-day, very obvious over here is that from here the dollar also strengthening against the Swiss, the sterling, the euro, and now has starts to actually move up against the Japanese yen as well, but moving sideways against the Aussie, the Sing dollar, the CAD, the offshore yen, CNH, and also against underperforming the Kiwi over here. All right, so what we could see over here is that all in all, right, it's not a very clear dollar strength story. Yes, dollar strength story against the European currency, the sterling, the Swiss, the euro, and now against the Japanese yen, but not so clear against the Aussie, the Sing, the CAD, the Chinese yuan, the CNH, and as well as the Kiwi dollar. So overall, what we could see over here is that there is actually a K-shaped performance, not a clear dollar strength over here. So now let's take a look at the dollar strength. What we have, so far a continuation that we have for yesterday. Okay, so now let's take a look at the short-term technical outlook on the sterling dollar first over here. So sterling dollar, means the dollar versus, pardon me, the cable versus the sterling. That means GBP / USD. So this is a 1 hour chart. So for sure over here is that yesterday we have a bearish buyer short-term condition on the sterling dollar. Price actually hit the 1.2195 short-term support that we highlighted, hit the level. At the moment in time, there is no clear sign of a bearish exhaustion on the sterling dollar. The hourly RSI continue to be negative, has not flashed any clear sign of a bullish divergence. I mean, there's no higher low that was being seen on the sterling, on the hourly RSI. So we will actually continue to maintain this short-term bearish bias on the sterling dollar, but I do not want to tie it so tight of yesterday's swing high, which is at 122.38. So I will shift it slightly lower to Friday's swing high at 122.85 to maintain this short-term bearish condition on the sterling dollar to expose the next short-term support level. So this support level is pretty much key at 121.50. Why is it so? Because at 121.50 level is actually the this medium-term descending channel lower boundary, and as well as if we go down to the daily chart over here, that 121.50, okay, is at this congestion area of 21st of February and 28th of February this year. Okay, this former swing high turns into a pullback support. So this is a congestion area at 2150. Okay, so let me go out to the 1 hour chart again to have a bit of refresh. All right. So all in all, as long as 2285 short-term pivotal resistance is not surpassed, the short-term bearish condition remains intact for the sterling dollar to expose the next support level at 2150. However, if we start to see a clearance above 122.85, then this short-term bearish condition will be invalidated to see the start of a more pronounced corrective rebound to retest the 200-day moving average, now acting as a resistance at 124.35. We saw confluence with this swing high area of 15th of September, very close to 19th of September and 21st of September as well. Okay, now euro dollar. Okay, euro dollar, 1 hour chart of the euro dollar. Yesterday price action, we have a short-term bearish bias condition with a support at 10585. Support level hit, price action going to inch much lower. RSI, hourly RSI, also no clear signs of a bullish divergence, indicating to us that this short-term bearish condition still remains intact on the euro dollar. So yesterday there was this minor swing low area that is in place on late Friday, broken down yesterday, Monday session. So this will be like a former minor support level turns into a pullback resistance, but I don't want to type the key short-term pivotal resistance today to be so tight at 1.064. I'll use Friday's swing high area for the short-term pivotal resistance for today at 1.0065 to maintain this short-term bearish bias condition to expose the next support level at 1.0515. What is this is a key support level. What is 1.0515? Is in fact this medium-term descending channel lower boundary that is in place since 18th of July this year. All right. So still maintaining that short-term bearish bias on the euro dollar over here, as long as this key short-term pivotal support holds at 1.0665. But however, if we start to have a clearance above 1.0665, then this euro dollar may start to see a more pronounced corrective rebound towards the next resistance over here at 1.0760, which is also the upper boundary of that medium-term descending channel, and the swing high of 11th of September to 13th of September, confluencing at 1.0760 as well. 1.0760 as well. All right. So still maintaining that short-term bearish bias condition on the euro dollar as long as 1.0665 key short-term pivotal resistance is not surpassed. Okay, now like I share with you all, the Kiwi dollar is the strongest performer against the dollar for in the last 5 day and the rolling 1 month performance. So what's cooking on the Kiwi dollar? So let's take a look at the Kiwi dollar chart. All right. So for the Kiwi dollar over here, it started to shape in a minor ascending channel on the hourly chart that is in place since 6th of September over here. So over here, the RSI also managed to shape higher low. All right. And continue to hold above the 50 level. So I'll be using 59.40 as a key short-term pivotal support level for the Kiwi dollar, the NZD/USD. So in short form, I call it the Kiwi dollar, to see a potential push up to test the upper boundary of this short-term ascending channel at 60.07. 60.07 resistance level, which is also confluence with the minor swing high of 30th of August and 1st of September, and as well as this downward sloping 50-day moving average. All right, so it's more like a short-term, we call it a bullish bias condition. Unless we see a clearance above the 50-day moving average, then we could actually validate a more substantial push up from a multi-week perspective. So for now, 59.40 key short-term pivotal support level on the Kiwi dollar for a short-term bullish bias condition to test the resistance, the intermediate resistance at 60.07. But however, if we start to see an hourly close below 59.40, then this short-term bullish bias condition will be invalidated to see a retest at this key medium-term support level, which is the 15th of September swing low and the 21st of September swing low, confluencing at the 59 figure psychological level on the Kiwi dollar. Okay, so now moving on to the dollar yen. So still recall that dollar yen yesterday we have a bearish bias below 148.85. So this level has been surpassed yesterday. This push up, and right now the dollar yen is now trying to we call it congest within a minor bullish pennant configuration. So I will actually due to the fact that the momentum starts to actually flip to the bullish side of the story, the short-term momentum, RSI continue to remain strong, holding above a higher low, this ascending support over here. No clear signs of a bullish divergence as well on the overbought level. Despite high price action going to shape higher, no bullish divergence that's being seen on the RSI, despite the fact that he hit the overbought and now trying to actually shape that pullback, but held above this parallel support level that I draw on the RSI. So for sure, momentum has started to turn bullish on the, at least in the short term for the dollar yen. So I got to respect the price action. So we will be flipping to a short-term bullish bias condition for today on the dollar yen, as long as 148.40 key short-term pivotal support holds as depicted on this short-term hourly chart on the RSI. Previously, range resistance now turns into a pullback support. Next resistance level to watch out for will be 149.45 on the hourly chart. Above should see the major resistance zone at 149.80/150 level. So what's 150 level? If you go to the daily chart over here, 150 level over here is this level, which is the swing high of 21st of August, which actually in last year 21st of October that actually ignited the MOF instruction to instruct BOJ to sell the dollar yen. All right, so this level psychologically it will be an important level to watch. So that will be our major resistance zone at 149.80/150 level on the dollar yen. So in a nutshell, all in all, flipping to a short-term bullish bias condition on the dollar yen as long as 148.40 key short-term pivotal support holds. However, if we start to see an hourly close below 148.40, then this short-term bullish bias will be invalidated to see the start of a corrective pullback, a more substantial corrective pullback or decline to test the next support level at 147.50, which was this congestion zone over here, pretty clear. Previously, resistance turns into a pullback support on last Friday, and as well as the 20-day moving average as well, coming to add support at 147.50 level. Okay, so that's sum up for the FX space. Now let's move on to these major benchmark stock indices. Let's start off with Asia first. Still recall that in Hong Kong 33 index for yesterday, we have a bearish bias below 1860. Price action pushed down and as intended and hit the support level at 17,570 that we highlighted yesterday, which was the 21st of August swing low area. Price action going to remains lackluster. No clear signs of a bullish divergence yet on the hourly RSI. So we were actually going to maintain that short-term bearish bias condition with a tightened key short-term pivotal resistance for today at 17,815, which is this former support level turns into a pullback resistance on the minor pullback resistance. So 17,815 will be the tightened key short-term pivotal resistance that we have for today. Looking for the Hong Kong 33 to shape another potential down leg because its technical configuration still remains on the bearish side of the story to test the next support level at 17,370. However, if we start to see a breakup or hourly close above 17,815, then this short-term bearish condition bias will be negated to see a retest of last Friday, yesterday's high level at 18,060 resistance level for the Hong Kong 33 index. All right. German 30, yesterday we have a bearish bias condition as well. Price action hit the support level at 15,320 before shaping that rebound. Over here, the momentum still remains pretty much biased over here. No clear signs of a bearish bullish divergence as price action going to inch lower, price action lower low, RSI going to shape lower low as well. All right, so no clear signs of a bullish divergence on the hourly RSI, indicating to us that the short-term momentum is still remains negative. So we will actually maintain a short-term bearish bias condition with a slightly tightened key short-term pivotal resistance for today at 15,475, looking for a retest at 15,320, followed by the next support level at 15,255. However, if you start to see an hourly close above 15,575, then potentially we could see a corrective rebound to retest the 200-day moving average, now acting as a resistance at 15,570. We saw confluence with last Friday's swing high and yesterday's swing high area as well, coinciding at this 15,570 key next resistance level on the German 30 index. Okay, the major US stock indices, Dow Jones Industrial Average. Yesterday we have a bearish bias. It hit that 200-day moving average. That was our short-term support that we highlighted yesterday, 33,815 / 33,760. So we were still maintaining that short-term bearish bias condition with a slight tighten key short-term pivotal resistance level at 34,160. Looking for a retest at 33,760. A break below it potential could take us down much lower towards the next support level at 33,630 level on the on the US Wall Street 30 index, which is the Dow Jones Industrial Average. However, if we start to see an hourly close above 34,160, then this short-term bearish condition will be invalidated for today to see a potential corrective rebound to test the next resistance at 34,370 level. Okay, now the Nasdaq 100. So over here, the Nasdaq 100 over here on the hourly chart going to inch downwards much lower. So still no change. 14,910 will be the key short-term pivotal resistance level. As long as this level holds, the Nasdaq 100 potentially could maintain its bearish short-term bearish condition to test the next support level at 14,560, which is the swing low area of 18th of August. However, if you start to see a hourly close above 14,910 level, then the Nasdaq 100 potentially could see the start of a corrective rebound towards the next next resistance level, pardon me, at 15,040, followed by 15,170, which is close to the 200-day moving average, acting as a resistance, as well as this former swing low area of 7th of August at 7th of September at 18th of September, now turns into a pullback resistance as well as 15,170. So still maintaining that short-term bearish bias condition on the Nasdaq 100 as long as 15,910 key short-term pivotal resistance is not surpassed to the upside on the Nasdaq 100. All right, so with that, we come close to the 30-minute mark for today's daily dose of market insights. So this is the key highlights that I share with you all for today. So have a great day ahead, and we shall speak again tomorrow. Thank you.